Good morning and welcome to the Totally PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and could be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, I'd like to submit the following poll, and I'd now like to hand you over to Wendy Lawrence, CEO. Good morning.
Good morning. Thank you for the introduction and thank you to everybody for taking the time to join us this morning. There'll be two of us doing the presentation to you today, myself, Wendy Lawrence, Chief Executive of Totally, and also Lawrence Goldberg, the CFO at Totally, will be doing part of the presentation. We will try and answer questions that you put forward to us, and any questions that we don't get round to today, we will answer, including the pre-submitted questions. So without further ado, I will move on to the presentation. So first of all, an operational update from us. So we're absolutely really pleased with the results that we're putting out to you today. The message that I would like you to take away is that we are where we thought we would be at this time of the year. The results that we've put in front of you are robust and again, where we thought they were going to be. We now have a stronger and more resilient organisation. That is as a result of us spending the last 18 months looking at our own cost base and doing what we could to actually manage that. And the really pleasing bit is that we have not compromised the quality of the service that we are providing. All of our CQC services remain registered as good, and we're getting some really pleasing feedback from the NHS. We'll touch on that as we go through. So a stronger, more resilient organisation. You will have seen that we released not so long ago that we had secured a new contract in the north of England. That fell into our elective care division to support patients that were sitting on waiting lists for that particular trust. That was is a 6-month contract, value circa £5 million to actually treat just over 19,000 patients. And I do have to say that is the tip of the iceberg at this organisation, and we mobilised the service very quickly. We're continuing to work there and we're having a really good positive impact there with fantastic patient feedback. So hopefully you will see that that demonstrates now that we are very much in a growth phase. Performance across our services remains strong. As I say, all of our CQC registered services remain good, and we're continuing to drive growth, improve our profit and cost effectiveness. So all of the things that we said we were going to do, we're actually doing. Good operational progress. I've touched on the CQC. This is really important because whenever you are looking internally to an organisation and restructuring, it's very important to make sure that what you do remains as the best that you can make it. And it is really pleasing to see that all of our services remain rated as good. We have had visits from the Care Quality Commission. We're in touch with them all the time. So it's not as though these things have just been left like that and not been reviewed. They are reviewed and they're reviewed regularly. You'll see in the work that we've put out there, we've had 6 new contract wins for elective care, totaling circa 7.5 million, including the one in the north of England that I've just referred to, and a further 14 contracts renewed. Renewals are very important for us because obviously it underpins our revenue going forward. We are now in that phase where preparations for winter have been underway for a few months. We are expecting a resurgence of flu and COVID-19, and I'm sure all of you are aware that that is actually happening. But through our experience and through the staff that work for us, we're standing alongside the NHS to manage those. We have in the last few weeks seen an increase in the people that are attending services within urgent treatment centres. And what typically happens once you see that the demand for those services are increasing, that then translates it across into 111. And again, we're sitting ready. So exceptional performance across our services. When we look back over the last 6 months, 93% of patients were transferred or discharged within 4 hours within all of our urgent treatment centres. Some were better, some were, that's the average for our UTCs. And we have consistently outperformed the national service average for NHS 111. So that is fabulous for us. And for those of you who follow us on social media, I'm sure that you've read the additional information that we put out on that a few weeks ago. It's absolutely fabulous to get that kind of feedback, because it shows all of the decisions that you're making day to day about your services are delivering the rewards, and patients are being seen quickly, efficiently, and the quality of what we do is good. I will come back to some more detail shortly, but at this stage I'm going to hand over to Lawrence for you to take you through some of the financial figures.
Good morning, everyone. So I'm very pleased to report that we've returned to profitability for the half year just finished. It's a very modest level of profit, but in terms of where we set out, that's exactly where we expect it to be. That's based upon a top line revenue of 41.7 million, which once again leads me to conclude that we are on track for our full year forecast position of 85 million. That revenue is a step down from where we were in previous years, and you can see that in the comparison figures. But again, that's something we talked about last time and is expected. I think what I'm particularly pleased about is we've maintained our profitability margins, our gross margin throughout the half year. And when I stand back, our actual EBITDA level has increased, and as you know, a simple metric of 2.8% of EBITDA as percentage of revenue is very strong and slightly better than I expected to be, if I'm honest. So that financial performance is based upon a very small amount of exceptionals, and therefore what we can see is that we're in that position of profit before tax, being the small amount of just the £50,000. On the cash side, then once again, cash is in line with expectations of 1.4 million. That is comparable to this time last year, and there'll be an element of seasonality in that we're often, as a business, will see more activity during the winter months and the summer months, so I expect that to increase in terms of our cash position as we go through to March of 2025. And I think just for completeness, just to confirm to everyone that we have renewed our revolving credit facility with NatWest for a further 2 years, which we talked about before, but we've confirmed that and renewed it. Thank you, Wendy. I've put a little bit more detail in terms of the financials on this slide. And on the left-hand side, our income statement, you can see that, or our profit and loss, again confirming what I've already talked about. I think the thing that I would draw out is you can see that our administrative expenses, half year on half year, have moved from a run rate of say 17 million at the 8569 to a run rate of less than 12 million. We talked last time about the actions we've taken in terms of reducing our cost base, and that's come through in this half year, and there's slightly further reductions which I'd expect to come through as we go forward. I've also put on the right hand side of this slide our statement of financial position, a balance sheet, and I put that there really to see that you can see there's pretty much consistency between our audited balance sheet at the end of March of 24 and where we are at our half year. Slight movement in terms of current assets and current liabilities. That purely reflects the size of the business throughout this financial year. So just to conclude, a half year of very solid performance in terms of where we expected to be, and a return to profitability.
Thank you. So where's that taking us? So we believe that the opportunity to work with the NHS absolutely remains attractive. The healthcare market continues to face significant challenges. We know that waiting lists are high, and I've already referred to those. We saw the publication of Lord Darcy's report on the state of the NHS, and that detailed how long people were waiting and the quality of treatment. I don't think there was really any surprises in Lord Darcy's report for us, and I think those of us that are working in healthcare and are embedded into the healthcare system understood absolutely the issues that was surrounding it, and we just needed to ensure that was being acknowledged and moved on. We saw the budget and was very pleased to see that the new government is acknowledging that healthcare does need additional funding, and as part of the budget, one of the highlights was that funding to be made available for an extra 40,000 elective appointments a week. And it shows you how that runs through, because the contract in the north of England, we are pulling down outpatients, we are seeing outpatients and then converting those onto day case lists and inpatient lists that we then manage through to discharge. So we're very much part of that system. The North of England contract isn't the only one. We've already referred to those, but it was the biggest that we saw. And we don't normally see those coming down the elective line. So we think that's an indicator of more things to come. The government has also confirmed that it will be publishing its 10-year health plan to fix the NHS in spring 2025. So we expect to see some more clarity. But the themes that are coming through already, not only is the focus on reducing the number of people waiting, which has been there for some time and is a thing that obviously everybody knows is unacceptable, but also they're looking at how they can improve access to services, and I believe there are major opportunities for that for Totally, both within its current service models, but also new service models that we are able to begin very, very quickly, and in fact have provided in the past. So massive opportunities for us on that front. So the outlook for full year 25, we are on track to deliver market expectations. And again, just reiterating to you that the numbers that we've put out to you now on our interims are absolutely where we thought we would be and are absolutely robust. We've had new contract wins already that underpin the current financial year forecast, and we do expect more, and we will obviously update everybody as we go forward. It's important as well to acknowledge that since the budget announcement, we've reviewed the implications of us as an organisation. As part of our forecasting, Lawrence and his team with the board were prudent and anticipated some change in the national minimum wage, national living wage, and we didn't foresee the reduction in the national insurance threshold, but I don't think anybody did. And we have mechanisms within the organisation to mitigate the impact of that delivery. So certainly now we don't see that as a problem, and we will be standing by our forecasts. Continued focus, this is not new for us now. We will focus on what we can control. We will ensure that the services for patients remain really, really high quality, that we deliver value of money for our commissioners, and obviously appropriate returns for investors. I appreciate that's quite a canter through all of the information to you, but to summarise, we told you at the full year we were ready now to react to new opportunities. Those new opportunities have appeared during H1. We are delivering on those. Certainly with the North of England contract, we were delivering services within 10 days of being awarded that contract. That was quick, but again, we had the systems and processes in place, and we had the people ready to be able to mobilise quickly, safely and efficiently. And the feedback that we're getting from that contract is very, very positive, and is being very well received by the commissioners. So immediate term, keep doing what we're doing. Healthcare market continues to present opportunities for us. We expecting additional funding becoming available. Some of that is coming through now. The pipeline of opportunity is good, and we will continue to do those and to work on those and look at how we can bring more new business into the organisation. And then in the longer term, which is really not that long, in the next 6 months, we will get the further clarity on the long-term plan within the 10-year plan that the government are publishing. And again, what we're expecting in that is a further focus on the reduction of people who are waiting for care, and some ideas around how they would like to see access improved to all services, which are two of the main focuses that Totally have always promoted, always provided, and will continue to do for the NHS. It is our job to provide capacity where demand is outstripping the normal routes. So we're really pleased with what we've presented to you today, and please take away from this presentation that things are exactly where we expected them to be, and we do expect to meet our forecasts this coming year. Without further ado, that's the end of the presentation.
Wendy, Lawrence, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab situated on the top right-hand corner of your screen. Just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you can see, we've received a number of questions throughout today's presentation. Can I please ask you to read out the questions and give responses where appropriate to do so, and I'll pick up from you at the end.
Thank you. I will, Lawrence and I will try and address as many of the questions that we can. There is a lot, so if we don't get round to them, you have our commitment that we will respond to these and publish them back on the platform. And anything that's on here where I don't have the data, we will do the same. So one of the pre-submitted questions, and I don't have a name, but one of them was, when will the dividend start? The board take dividend policy very seriously, and when we made the decision to halt our dividend payment, it was when we were actually going through all of our cost base and everything. This is reviewed regularly, and when we feel able, we will, but that certainly isn't at this time. Another question, why is the stock price not moving? I kind of want to say your guess is as good as mine. Obviously, we want to see the share price responding positively. I do think that there's been a lot of uncertainty in the world recently, not only the election in the US. So I am hoping that as we meet with our current investors and some new investors, and certainly from today, that people will be reassured on the progress that we are making and the robust nature of the results that we're actually forecasting. So I hope to see that respond too. There is a question from Chris G. Can you quantify the impact of the recent changes to NI announced in the budget and your ability to absorb or pass on? I think I answered that within the presentation. We've reviewed that, and we do believe we have the mechanisms to deal with that, and we're not looking to change our forecasts. Lawson M, you have a large net current liabilities position. How do you manage that, and can you see that improving materially in the near future? I think that's one for you, Lawrence.
Yeah, no, thank you. Thanks for the question as well. I mean, mainly that's a result of our trading activity. So we are managing that, and we manage that on a constant basis. We have in place a level of reporting and focus in terms of our receivables activity. We have that will include our borrowing as well, which has been at a constant level of 2.5 million, which you can see in the financial statements. So it will reduce to some extent, but it's not something which we're particularly concerned about in terms of our current trading activity.
Thank you. Another question from Chris G. Given the cost savings you have made, what is your ability to deliver new contracts before you need to start increasing headcount again? It's a really good question, and it really depends on the nature of the contract and exactly what it is. So Generally speaking, the elective care contracts on insourcing and outsourcing, they are provided by consultants who are not employees. They are all employees of the NHS. So we have a bank of people, a very large bank of people, I do have to say, who we use and work with us to do that work. So they don't actually come into PAYE, so they're not counted in as headcount. Depending on the work that comes through. That would be different if it was a large contract for an urgent treatment centre, for example, and if we needed to increase the headcount for that, then we would, because all of that will be costed into the contract. And similarly, if that required us to expand our IT capability, that would all be wound up into whatever the tender was that we'd gone for. So where we are at the moment, we have a infrastructure that is ready for the growth that we have anticipated within our figures. So any changes that we are required to make, both in corporate or in operational delivery, is all embedded in our plan and within our forecast. So it really does depend on the opportunities that come down to us and work that comes our way. But thank you for the question, because I think it is a really good question. Yeah, Nitin, you've asked the question about quantifying numerically the impact of the NI and the tax changes. I'm not going to do that in a public forum for the simple reason it is not only investors that listen to these things. We have a wide range of people, and it's not information that I particularly want to put in the public domain. But please be reassured that we absolutely know what the impact of that is. We know how we're going to cover it. And we know how we will take that forward and mitigate any impact on the forecast going forward. So I do hope you understand why I'm not actually going to talk about a figure. Andrew N, is there any likelihood of a restoration of the dividend payment? As I've already said, this is something that the board take very, very seriously in the overall performance of the organisation. And of course, we would like to return to dividend, and it would have been nice if we didn't have to stop it. So at an appropriate time, I am sure the board will consider that and restore that at the most appropriate time. So it's not something that's just forgotten. It is something that's reviewed regularly by the board at its meetings. Neil M, a similar question about the impact of the NI changes, which I've already answered that question. Colin M, 1 million of headroom on the RCF seems tight. Are you confident it's sufficient? Yes, I absolutely am. And the reduction in the RCF just reflected the size of the company. When we originally completed the RCF with NatWest, we were a much bigger organisation, so all it's done is a proportional change in terms of the RCF, and we have every confidence. Our lender as well, NatWest, has also said to us that should we see a need for working capital, further working capital, if the growth actually goes beyond what we've considered, that to speak to them, and they are absolutely working in partnership to sort us. But no, we're absolutely comfortable, and it was all done in light of the size of the company. And again, as Lawrence has confirmed, that is all done and dusted.
Yeah, it is. And just to reiterate, it as per plan, and we've been consistently having 2.5 million of borrowing throughout this period. As we said, we're online with our current view of our forecasts, and those are cash generative within the second half of the year.
Okay, another question. I'm trying to get through. There are lots. Has the changing working capital profile of the business over the last 18 months or so now stabilised? Yes, I can answer that one. When do you expect to begin to generate cash again and move back into a net cash position?
Yeah, so it very much has stabilised. On a sort of day-to-day basis, it really is quite straightforward and standard. And we knew that this half of the year would be affected by some level of seasonality, in terms of there's less activity during the summer months, and then we also know that our new business win profile was going to be generative of cash in the second half of the year. So both of those factors will combine in terms of that. And therefore, we would expect within the second half of the year to move to in terms of a net cash positive position.
Thank you. Chris S, of the large number of patients on waiting lists that you showed, how many are at Totally hospitals? So the number of people on waiting lists is the number that is publicised by NHS England. It only covers England. It doesn't include other parts of the UK. I don't have in front of me the breakdown of how many of those are at the hospitals that we work with. And to be quite honest with you, I don't necessarily think it would be indicative of the work we do, because at some hospitals we work on particular specialties or in a particular way to clear down particular waiting lists that hospital wants us to work at. And remember, we also work and deliver services to a large volume of hospitals and patients in the Republic of Ireland. What we are going to be doing, and what you'll see come through us, we are going to be putting out on social media more details of the number of patients that we are regularly treating. So if you see that, and I mean, I guess the only other indicator that I can give you is that with the large contract that we secured, we are treating 19,000 patients in our initial contract with them, and that is one of the larger trusts in the country. They're all very, very, very different in terms of specific organisations, but I don't have the numbers in front of me, and that is a genuine I don't. What is the payment for an intangible asset in your cash flow statement? Are there any more to pay in the foreseeable future?
Yeah, so in terms of the balance sheet, as I sort of alluded to, we've had a fairly straightforward and standard half year. So therefore, we will have software which we will use, and we'll take that as an intangible asset. So that will be there. We've invested, we've talked about it before, in terms of our new workforce management system. So there's an element which we will have going into intangibles there.
Okay.
Yeah.
We've got a question from Graham W. I assume that's Graham Wales. Thank you for your question, Graham. It's quite complex in terms of the cash flow statements. What I'm going to suggest is that Lawrence actually answers that question and we publicise it on the website so that we can actually give you the detail rather than just trying to cover it verbally. But we will answer all of the questions, and we will publish the answer to your question. The last bit where you've put, I'll read out the questions so everybody knows.
Yeah.
Your cash flow statements show 8 million working capital outflow in FY23, 2 million in FY24, and a further 1 million in full year 25. You still have 14 million net current liabilities and only 1.4 cash at the end of H1 with 1 million additional debt capacity. What happens if you lose another big contract? We will respond to that, and we will publish the answer. We are not in a position where we see any short-term losses of major contracts, Graham, just so that you can hear that from the horse's mouth, so to speak. But I will get Lawrence to reply to that solidly so that everybody can see the reply. So thank you very much for your question. Emma C, is Simon Stillwell still as actively involved as he was when he started as chairman? He absolutely is. The reason that he's not on the roadshow with us, he came out on the full results, and that was the first time that we'd been out as a 3. It's not normal for a chairman to come out with you all the time. And what Simon has specifically said, with him not being here today, if anybody does want to meet with him, then please contact us, and he is accessible. And I do believe he's actually watching the presentation today on IMC, so no pressure there. We're not going to think about that. But no, we have regular board meetings. We have 10 board meetings a year. We do those all face to face. I speak to Simon almost daily. I don't know whether that's good for him, but we are in regular contact. We announced the appointment of a new non-executive director who chairs our audit committee when we put our results out, in Bob Forsyth, and many of you will know we've been out to the market looking for another non-executive director. Applications for that closed last week, and we will be reviewing applications, but we've been told by the company that we're working with that we've had a very good response. So we're hoping to bring in another new non-executive director by the end of the calendar year. So we'll update you as we move forward on that. Let me just look. Again, we've got quite a complex question here, again from Graham. I will read it out, and again, I think we will reply to that absolutely. Factually in writing, so that nothing is misunderstood. So Graham's asked, can you explain why it is reasonable for your main urgent care subsidiaries, Vocare Limited and Greenbrook Healthcare Hounslow Limited, to report net current assets? It is only possible because of intercompany loans classified as current assets, but those loans cannot credibly be repaid in the near term because of Totally's consolidated net current liability position. Fine. I think I can work out what you're trying to get at, Graham, but what we'll do is we will publish that answer in writing, so that there is no misunderstanding about anything that we're saying. I'm very happy to do that. I'm very happy to provide clarity on the group structure and the arrangements of the group structure. So, how that works. Absolutely. Yeah, we'll provide that for you. In the essence of time and how long we've been going, the remaining questions, we will reply to online, and we will answer them and publish. So again, thank you for your time.
Wendy, Lawrence, thank you for answering all those questions you can from investors. And of course, the company can review all questions submitted today, and will publish those responses on the Investor Meet Company platform. Just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Wendy, could I please just ask you for a few closing comments?
Yeah, so I hope that you take away from the presentation today that the company is very confident in the performance that they have delivered during H1. We're really excited about the future. To be honest, the additional funding that's coming down into healthcare and where that is being directed, the pipeline of opportunity is very, very strong, and we've done everything that we said we would do. And I think the efforts of the company over the last 18 months to absolutely get a grip on its costs, controlling what it can control, are now delivering benefits. So we look forward to updating you again with our full year results, and remain committed to the forecasts that are out in the market. So thank you.
Wendy, Lawrence, thank you for updating investors today. Can I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of Totally PLC, we'd like to thank you for attending today's presentation, and good morning to you all.